Welcome to Underground Crypto Deep Dive Show. Welcome back. Smash that like button, subscribe, all of that good stuff. You know the drill. Let's see, get me on the screen. That's part of the drill. And we're going to be talking more about HEX and Pulse Chain. Why do I love this show? Because I get to learn so much stuff every night with you guys that it really is the highlight of my day. I hope you guys feel the same. Who loves that HEX Pulse community? Apparently, we got some pumps going on today. YouTube's lying to me again. It says there's 3 people watching. I know that's not true. That could not be true. All right, let's take a look at this 4-hour chart. Looks like we are battling this red line, which is the 200. The white line is the 21. And we are just getting back above that 4-hour 200-day moving average. I would say we're battling it, but I mean, we're battling to keep it more than anything, right? How's everybody doing out there? Shout out to all my undergrounders. See what we got going on. Oh, now there's only 2 people watching. There's no way. I have it on my phone and my TV here, and I know Melissa's here, so that's more than 2 people right there. Shout out to Melissa, the Funky Ferret. Stregaheart says, what's good, Stregaheart? Thank you for being here. It's telling me there's 3 watching. YouTube is a liar. It sure is. It sure is definitely not telling the truth. But it's fine. It's no big deal. I just love to point it out because, well, what? YouTube can't count how many people are here? It's very weird. Yesterday, we mapped the HEX and Pulse Chain ecosystem out. We separated Pulse Chain, the blockchain, from PLS, the native gas asset, and PulseX, the decentralized exchange, and HEX, the time lock token, right? Anybody remember any of this? Tonight, we isolate HEX and answer the question at the center of this entire economic design. Where do the rewards actually come from? The word staking creates a certain expectation. On a proof-of-stake blockchain, validators earn rewards for securing the network. On a lending platform, depositors may earn interest paid by the borrowers, right? Because they're lending out that liquidity. In traditional finance, a bank may lend deposited money and share part of the revenue with the depositors. Yeah, right. They don't share anything with the depositors. HEX is different from all 3 of these, okay? This is where I want to draw some distinction. When people stake HEX, they're not validating Pulse Chain or Ethereum. They are interacting with a smart contract that destroys or burns the locked HEX, assigns accounting shares, and then later mints an eligible amount of HEX when the stake is ended. Tonight, we will explain T-shares, the share rate, token inflation, stake length bonuses, and penalties. Most importantly, we will separate a returned measure of HEX from a return measure of purchasing power. You'll come to know what that means in just a little bit. Let me know in the chat, would you ever commit to locking an asset for 10 years or longer if the reward was supposed to be good enough? In crypto, that's a scary thought because 10 years is a long time. It could be a dead protocol by then. What information would you need to make a decision like that? Let me know in the chat if you would you ever lock up something for more than 10 years? We're not talking about holding it for 10 years. We're talking about locking it up. And the quote of the day, though, is from Benjamin Franklin. An investment in knowledge pays the best interest. And here we are raising that crypto IQ. Everybody get ready. Here we come. Caught up on the chat. Let's talk about something you may not know. A native HEX stake does not place intact tokens inside a vault. The HEX committed to the stake is burned, and eligible principal plus reward are minted when the stake ends. A T-share is not a freely traded token sitting inside your wallet where you could do something like restaking. It's an accounting unit representing part of the daily HEX payout pool. The share rate is designed not to move backwards. A successful stake ends. Obtaining the same number of shares can require more HEX in the future. The 3.69% figure described maximum annual protocol inflation after HEX's first year, not a guaranteed 3.69% or 38% return for every person. A stake does not automatically pay itself into the wallet when it matures. Someone must call the appropriate contract function. And according to the HEX design documentation, half of HEX reclaimed through penalties enters the staking payout pool, while the other half goes to the origin address. And this is directly from the HEX white paper that we got that information. Now let's go take a look at those crypto bubbles and how this market is doing. It seems to be doing pretty all right today. How do you guys feel about the market today? Did you get a little bit of pump in your bags or anything that you bought recently? Anybody buy anything recently that is doing well? Now, obviously, if you bought it quite some time ago, it's a different story, right? That's hilarious. All right, so we have SYS up 94%, but we need to get to that 1 through 100 page here as we kick off. So we got Pump.Fun up 13.6%. It's really the biggest green bubble in the 1 through 100. Let's toggle that 1 through 1,000 here and let's take a look. No real big gainer. Oh, okay. So 2 to 300 actually is up to 2.4%. Let's call it 2.5% there. So we'll be looking at that category next. Beat is down 18%. Pretty sure it was down yesterday, so that's not really good for Beat. Not that I'm into this project at all. ETHFi 11.5% to the downside. I was expecting to see a lot more green with all the pump that was going on. Maybe things have pulled back recently. And let's drop down 100 to 200 here. BTW still pumping. Bitway up another 30%. Let's see, what's it up on the week? 50%. It's only up 100% on the month. That's not that crazy. HEX, though, getting a pump just like Melissa told me it was. Must be because we're talking about it. Are we pumping HEX here? 17.4% to the upside. It's a nice wake up, right? Like to see a coin wake up and get a little bit of a pump. PulseX also up almost 10%. UB or Unibase has not been doing amazing. I know that Reliable J had originally put this on my radar. I honestly didn't look at it as much as I probably should have. It had some nice pumps, and then I haven't really seen it do anything amazing lately. But it's still up 100%, or sorry, no, 10% on the month. So nothing crazy coming out of that project. Then, of course, you have the Shuffle. It's up 12%. Pretty sure it's like a casino or something like that. Let's drop down to the 2 to 300, where we got Seeker up 35.8%. Anybody who is dealing with the Solana phone Seeker is very happy about that. We have this Sisic, which we've talked about before. It jumped today. Jumped almost 100% today. And then you have Cash Cat up to 85 million. Remember, this thing's been up to about 280 million, I think, at one point. Cash Cat, the premier meme coin on the Robinhood ecosystem. HEX up over 10%. SNDKB, which is SanDisk, if you can believe it or not, tokenized stock. It's up 11%. So we're seeing the tokenized stocks being represented here in our ecosystem, just like any other crypto project. That is a very interesting vibe, if you ask me. Let's do our price rundown, refresh it, make sure we have the latest number. Overall market cap of the crypto market, 2.27 trillion, up almost 1%, 0.8% today. Chris Goss in the house, 333, my fellow lifer givers gain. Welcome in, welcome in. So we got Bitcoin, 64,000, pretty much flat. $64,017, you want to be overly specific. Somebody does. Ethereum, $1,866. Hanging out near that $1,900 region. I like that. BNB, $594, hanging out around that $600 region. XRP, $1.07, hanging out above $1. So I'm liking that for those coins. Solana, $73.54. Hyperliquid has been getting a beat down. It was down a lot on the 7-day, but now we've kind of moved on. So the 7-day shows a 0.4% increase, but Hyperliquid's only $54.81. Hyperliquid is potentially something to look at getting a bag of, and Canton Network, which we'll get to in a minute, is something I'm considering as well. I know tokenomics, and I know that it shouldn't matter that Hyperliquid is $54, but it still makes me feel like I'm late to the party. Dogecoin. Let's call that 7 cents, 0.0699. Let's call that 7 cents. We got Zcash, $503, up 9.4%. Cardano, up almost 20% to 19 cents. It just came back out of nowhere. Glad to see it, though, because I do hold some Cardano. Monero, not Monaro, but Monero. XMR, $352, up 3% in the last 7 days. Chainlink, $8.12. XLM. There's been so much very productive news for XLM. And honestly, adoption in places where, you know, you usually hear people talk about your riddlers for XRP and, you know, people who are just overly bullish on things that are not provable. We've talked all about it. But XLM really legitimately has a lot of stuff being built on it and going on, and I'm just not seeing the price move. I don't know what that's about. It's odd. Canton is only 10 cents, a high 10 cents. If it drops under 10 cents, I might have to scoop a nice bag of some Canton Network. I think that could be a good one to hold. NJ Dub says, I like this title. Hey, welcome in, welcome in. Smash that like button and consider subscribing. Free link to our Discord in the chat. Come on over, be a member. That's where you can find us when I'm not streaming. So we got Toncoin, $1.39. Hedera, almost always the same price as Dogecoin. Very interesting. Avalanche, $6.66. SWE, 69 cents. Can't wait to buy some more SWE here. And what else do I want to talk about? Where's MemeCore at? MemeCore, $1.16. It's still holding above $1. I think I bought all of my MemeCore around $1.13. I want to say that sounds right. So even though it fell from its $3 highs, it really hasn't been underwater too much for me. I think that was a little bit of just luck. ICP at 209. Let's move on. Let's take a look at what's trending today. And then we'll introduce, well, I've introduced the topic, but we're going to get into the educational part of it and talk about T-shares and stuff a little bit more. If you're here with me, smash that like button. So, trending coins today, Pump.Fun, CashCat. CashCat's no surprise here. It's up 100% today. We've got Pudgy Penguins, Hyperliquid, BitTensor, Derive, a decentralized exchange, right? Or for derivatives, that is. Caspa. Glad to see Caspa on the radar. I really am a little bit surprised at the way Caspa has gone about. Caspa was proof of work. It had so much stuff going on. They were about to roll out the KRC20 tokens, just like an ERC20, a BRC20, any of those kind of things, right? A token, a smart contract token. And then it just all fell apart, and I couldn't. The weird part is, as much as we do this research, I couldn't tell you why Caspa fell apart. I don't get it. But I do hold a small bag of it, and I would like to see it do something. A lot of people still believe in it. There was an even recent time recently where Caspa Education was a trending tag on Twitter. X, whatever you want to call it. And then I thought maybe it was going to get a little momentum, and that just kind of fizzled out. So I'm keeping an eye on it. I own a bag from a long time ago. Couldn't tell you if I was up or down, to be completely honest with you. Might need to scoop a little bit just to even the playing field there. When you hold something and you have conviction, never financial advice, this is just my own opinion, right? My own opinion. If you hold something and you have conviction in it, and it goes down drastically, like you're down like 90%, but you have conviction, you really do love the project, and there's a lot of people who feel that way about Caspa specifically, but this could apply to anything. If you're down 90%, you're not going to sell it at 90% bottom of the bear market. That would be a pretty foolish thing to do, period. If you were going to do that, you might as well just sell and never come back to crypto, go somewhere else, do something else, right? Buy a little bit more. That's what I do. If you're down that much and you believe in something, it's just a great opportunity to increase your bag, right? Virtual Protocol, Bitcoin, Solana, FET, Artificial Superintelligence Alliance, an old project that is remaining relevant, which is nice because I got into FET before it was even FET. It was 3 different projects. They merged into one, and then one of those 3 eventually backed out, and so I think it's just 2 now. I'd have to research that a little bit, but it's at least 2 of the projects. Venice token, GRVT token, which I keep wanting to think stands for gravity, but I don't know that it does. KDO and Unibase. Usually, first of all, we're looking at what's relevant here and what's trending, but usually I'm looking for tokens that maybe are new or we don't know what they are, something like that. So we're not going to go over any of those because you should know what most of those are. Fear and Greed Index is 27. Yesterday it was 25. 7 days ago it was 29. And a month ago it was 24. And they don't average those either. That's just exactly 7 days ago. That's what it was. Well, that's good to know. It's holding up above extreme fear. If you've ever looked at the Fear and Greed Index chart before, extreme fear, fear, neutral, greed, and extreme greed. We love when we get into the green, but it's kind of a double-edged sword because if you quickly go from fear to greed and don't slowly build momentum, you usually swing back just as quick as you went up. And that's not really good long-term for your bags, right? For your bags of crypto. Let's go take a look at what is trending over here on Crypto Rank. But before we do, let's introduce the problem. All right, because we're talking about the HEX ecosystem, the Pulse ecosystem, Pulse X, HEX, all of these different things. And we got to stay focused here, even though we do our regular rundown of the market. The problem. Always start with the problem. Any good business starts with the problem. Any good education starts with the problem, in my opinion. Let's see what we got going on here. If anyone uses the Haha wallet, they are shutting it down. Move your crypto somewhere else. Melissa says, I still believe in Caspa. I still believe in Caspa for what I understand it as fundamentally as a project. What happened in the falling out, I don't really understand. I need to look into it. I've tried to look into it a couple times, and to be honest with you, I couldn't really find any, big moment or thing that happened that really validated why it's in the state that it's in. It almost seems like the bear market just got the best of it. And then I bought more Kindra today too. Hey, there you go. I'm still holding the Kindra I was holding. Is Kindra pumped today? We could look at it, but Melissa, maybe you could just tell me, has Kindra pumped well today? All right, let's lock in. Everybody put your educational thinking caps on. The biggest misunderstanding begins with the word interest. When people hear the word interest, they often imagine money generated by an outside source. A borrower making payments, a business earning revenue, or a validator receiving network fees. That assumption can make HEX rewards sound like outside income being deposited into a wallet. But HEX rewards are primarily created through the token's own issuance system. The smart contract can reliably produce additional HEX, while the open market simultaneously values each HEX at more or less than it did before. If viewers do not separate the token quantity from the token value, they cannot evaluate the results accurately. And this is very much setting up even the idea of what we call diminishing returns, which is not really a hard concept to understand. But in things like liquidity pool payouts and staking and things like that, if you're earning your reward for staking in the currency that you're staking and it is dropping in value, even though your bag has more of that currency in it, your monetary value could be considerably less. The shift is to follow the accounting rather than the advised or advertised percentage. A user commits an amount of HEX and picks a certain length of time. The HEX is burned This is very interesting. I have some HEX sitting around. I don't know what it's worth today. I think it originally, when I bought it, was worth like $200. And I really was interested in doing this whole educational part of the show because I want to know if I should be probably staking it. So the contract assigns shares. Those shares accumulate claims on daily HEX payouts. The stake reaches maturity. The user ends the stake, and the contract calculates how much HEX may be minted. The market decides what the HEX is worth. Once we see the process in that order, the real question actually becomes much clearer. What's the payoff? The payoff is the analysis that works regardless whether someone loves HEX or hates it, right? It's just the facts. It's neutral. Viewers can determine what the contract guarantees, what depends on other participants, what depends on the market, what risks are created by the locking up of your HEX, what happens if a stake is ended early or late, penalties or rewards, whether a quoted APY is denominated in HEX or dollars is a big difference, and it's probably in HEX, I would imagine. That allows us to respect what the code does without confusing program token issuance with guaranteed wealth. And that, to me, is a great introduction to tonight's show. Let's pop back over to CryptoRank and let's take a look. And I'm also going to toggle some news here. I don't know why I've been using the word toggle so much. It's kind of strange, actually. News today. And we'll let that do its thing while we move forward. Hey, John316 in the house. Welcome in, welcome in. He says, smash the like button. Thoughts on Zebek Network? Well, it's been a little while. I did some videos on Zebek Network. I did a video on the founders of Zebek Network, right? Because as a deep diving research channel, if you're going to believe in a project, you need to know who founded it. You need to know who the people behind it are. Are they smart? Are they highly respected? Are they got a bunch of other things that they've done? Doesn't have to be in crypto necessarily, but have they moved many other companies or projects to heights, right? Basically, have they made money before? And what are their accolades? Did they go to school? Have they worked in cryptography before? Stuff like that. I did like the founders. I have a whole video on it. Go find it on the channel if you want to specifically see about that. Also, I will say, they have a whole setup about payroll, right? And they're basically a payroll company. They do other things. They've got kind of a Zebek Super app that came out. I was researching it a little bit as that was rolling out, so I haven't looked at it since that was was initiated. But I will say I like that they have an actual function. But as I always say, they could be a payroll company. They could have a lot of customers. But the money that they make from the service that they offer is going to go to the treasury, not the market cap of the coin. Which means they could do really well as a business and not necessarily put any money into the market cap, and Zebek coin could not go up because of the service that they offer, unless otherwise noted. And that's where you get into things like the white paper and stuff like that. You want to know, do they burn? Is there any kind of deflationary function to Zebek? And when most people ask me about a token, they want to know, does it go up? That's what they want to know, right? Look at this, chocolate salty. What's up, man? Chocolate Salty. I haven't seen you in a while. Welcome in, welcome in. He says, you're talking about HEX. Is Richard Hart back on his Messiah arc? Hey, maybe he is. I've just been meaning to research it for a while. Figured we'd do it together, right? Because that's how we roll here at Underground Crypto. Crypto family. Cheers. I got the coffee so I can be locked in, right? All right, let's take a look at what we got here. Let's make this the top 20 and not the top 10. This is what is trending via CryptoRank. CryptoRank, very much geared more towards institutions and things, but also funding rounds, seed rounds, stuff like that, that investors might want to know about, right? It's more of an investor platform, and I would dare say even more of geared traditional finance platform, because who really looks at a lot of these funding rounds and stuff like that? We do. That's so funny when he says, is Richard Hart back on his Messiah arc? Richard Hart is a very interesting character, right? We will talk about that at some point during the show. So Bitcoin Cash, or the series, I should say. I don't know if it'll be today. Bitcoin Cash is trending CySic. We're going to touch on that because we haven't talked about this in a while. CySic is a full-stack computation network that turns GPU, ASIC, and compute into liquid yield-bearing asset. They're not the only person to think of this. There are several people. The chart looks pretty good, though. Look at this daily chart. It's pretty much in a range. Is it worth doing this? I don't know, but we're going to do it anyways. Something like that. And that. Look at that. So here's your range that you've been in. You started under it. You've only been under this bottom trend line twice, and you've only been above this top trend line like once, if you want to count this, maybe twice, right? My point is, you've been locked into this, and this thing just shot up. So now it's at that trend line. Is it going to shoot down? Because you got to be a little concerned when it shoots up like that and it stops right there at that resistance. This is a pretty basic support and resistance understanding here, right? And I'm messing it up. There we go. So if I like this project and it was on my radar because it pumped, I don't know that I would buy right here. I'd rather like to see it get above, flag out like it's gonna pump. It's not the best looking flag, right? Maybe get a flag like it's gonna pump some more. Hold this support and resistance level. Or I'd like to see it come back down and maybe buy on that rebound. But anyways, you do what you want to do. I'm just thinking out loud. 88.2 million in its market cap. Only been as high as 121. This is a very newer project. ZK proof. BNB and base ecosystem. Let's go take a look at their website. Yeah, when CySic pumps, it sure does. Chocolate Salty says, good, Melissa. Been busy on the day trading tip lately. How are you? I'm always narrating the chat. So the first full stack computational network. Own the growth of on-chain computation powered by CySic. NFTs to CYS redemptions. 50% unlock at token generation. 50% linear unlock over 6 months. Claim your CYS. Backed by industry leaders like Hashkey Capital, Polychain Capital, and OKX Ventures, all big players in the game. From silicon to protocol, CySic is building the full stack infrastructure for trustless, scalable, and monetizable computation. What are they building though? Got the production layer, ZK proof market, AI inference, agentic platforms, or agent platforms, same thing, digital computation. The next layer here is computation infrastructure layer. Hardware like ZK ASIC, GPU servers, and mining rigs. And we move into the execution layer, which is things like bridging, voting, swapping, and other functions, miscellaneous functions. And then you have a consensus layer. Consensus meaning how something operates. Cosmos CDK blockchain, so we're dealing with the Cosmos blockchain. Validators and miners. Cosmos has a lot of things going on, but it doesn't seem to get as much attention as it probably should. And so this being built on Cosmos ecosystem is interesting to me because it takes good projects to really keep an entire ecosystem relevant. You got to think when other projects come to something like Cosmos, they're going to look at how the, consensus, how the network runs, but they're also going to look at what good, successful projects are in that ecosystem is a big part of how they decide what they're going to do. Now, this looks like a really cool project. Let's get started and see what it says. You never know what we're going to be deep diving, right? And again, Chocolate Salty, it is great to see you. Welcome in, welcome in. So, decentralized prover and verifier network for zero knowledge. CySic, zero knowledge to be specific. Mainnet is now open. I wonder when the mainnet launched. I wonder if the pump today has something to do with the launching of their mainnet. Instant proofs, infinite possibilities. It says we can ask anything. All right, let's see what happens. It also says not available. Nice. Ask me anything, but at the same time, I'm also not available. Very helpful. 55,000 unique addresses. That doesn't really mean anything. 11,000 people could make 5 addresses, and then bam, you got 55,000 addresses. 8 million plus network interactions, and 100,000 reserved high-end graphic cards. That part is probably the most notable thing that they're telling us here. Unmatched performance. How CySic network works. You have the ZK project, provers, and voting pools. So the ZK project goes into the tasks, that goes into the network. The provers take the tasks and prove them, validate them. And then the voting pool, I don't know, does voting pool stuff. All right, we're going to move on. Probably have already spent a little bit too much time on this. But I like to see that project is moving because we had looked at it quite a bit before. Are we kind of coming to the bottom and getting some bullishness in the market, or is this just another dead cat bounce? You tell me. So we have Bundle. Bundle was in a funding round. Web3 network rewards, platform using stablecoin infrastructure for global payouts. If that doesn't make sense to you, you might need to raise that crypto IQ, but don't worry, because you are in the right place. Chocolate Salty says, Cosmos is dead, LOL. We researched how dead they are on one of your streams. I remember that, Chocolate Salty. That's why I kind of made that point about CySic. It's going to take projects to build on what I would consider to be a pretty dead ecosystem. They're going to need to build over there and then do really well in order to have any chance of revitalizing the Cosmos ecosystem. And why they would want to do that, I don't even know. Why wouldn't they just build it somewhere else? That's one of the things where having a higher crypto IQ can really benefit you, because as soon as I see that CySic is on the Cosmos ecosystem, makes me take a couple steps back from any type of thought of investing or caring about the project. Because regardless of how good your individual application or project is, if you're built on a dead chain, it is going to affect you at some point. You might do well, but not as well as you should be doing. Bundle is a United Arab Emirate-based Web3 reward platform that offers a blockchain-powered alternative to traditional discount and cashback marketing. This sounds kind of interesting. Built on decentralized rails and stablecoin infrastructure, the protocol provides a seamless, familiar user experience by handling all operational complexities in the background. Users earn network tickets throughout everyday transactions such as purchases or referrals, which are then converted into real value. The rewards are distributed using modern stablecoins. Of course, the pop-ups are getting in the way of the words. Modern stablecoin payment infrastructure enabling low-cost global payouts and straightforward rewards via licensed payment service providers. I'm going to be honest, even through all of that, I'm not really sure what the heck it's talking about. I understand the whole platform, rewards and stuff. They've raised 5.5 million here. Melissa has something, says, hey, can you check out this coin when you have a moment? It seems interesting. Listen, guys, when Melissa asks for something, we got to go do it immediately. Because she is always here for me. Can't drop the ball when she calls. Let's see what we got going on here. She gave us a contract address. If you ever want us to look at something, I'm more than glad to do it. I'll even stop the whole show to do it most of the time. But sending a contract address is the easiest way for me to get to whatever you're talking about without it getting confused and being something else that I wind up on. Contra repair. It's probably a normal word and I'm probably just overthinking it, but that is very weird name and a very long ticker. Contra. Why didn't they just name it Contra? That's so much better than this Contra pair. All right. After butchering words live on YouTube, 118,000. That's it. Market cap. This thing is tiny. It's got a billion max supply. Trying to combine the word billion with max. Shaking my head. All right. So the max supply is a billion. We're looking at the tokenomics. 971.6 million in its circulating supply, which means there are very few coins that are not out. If you know your tokenomics, you are ahead of the game. If you don't know your tokenomics, throw a 111 in the chat and we will help. We will help you out. It says no rush. Oh, absolutely. We were already just looking at coins anyways. We might as well look at the coin that you want to look at. So Solana contract address here. Contrapair.fun. That's an interesting idea. It's its own launch pad, it says. Competing with pump.fun might be bad for your health. I don't know. I'm not a doctor or anything, but it could be really bad for your health. I'm just saying. Every token pays its holders in stock. They're going to give me some of that NASDAQ 500 for my creator rewards. No, I'm just kidding. I don't think that's what they're talking about. It's a launch pad, but what ecosystems are supported here? Where's the Prime Minister? Prime Minister, are you with us? This is your territory, boss. Boss man, what do you think of this? I don't really know what to say about it. I mean, it's a launch pad. I see the tokens on here. Let's go with top. Let's see what the biggest one. I don't know. Okay, so Contrapair itself is like the biggest one with 122,000. Let's go market cap. What's the biggest market cap? I think that's it. Very strange. We got a Mars coin, an artificial Inu. Maybe that'll be a good one. Thing with the launchpad is how many people are over here. I see very, very low, right, amounts of money, which tells me there's not a lot of people in here. 323 launches. They've paid out 32,000 in fees. It's kind of nothing. 20,000 to holders and 12,000 to creators. It looks cool, but I just don't know enough of the ins and outs of launching a new launch pad and stuff. They'll probably get bought by Pump.Fun in a heartbeat and integrated. All right, let's jump back over to Bundle. Actually, I forgot to take a look at its chart. How long has this thing been around? Okay, so this literally came out 2 days ago. Its market cap is extremely low. Could be a good gamble as far as holding the actual token. Could be a really good gamble. But I wouldn't get into it more than you could afford to lose, that's for sure. That's just kind of common sense. Token launches backed by stocks. It's new meta, but confusing. The big one on Sol is actually called stocks. Okay. Oh, this is these new token stock these new stock tokens. Seen several of these today. Okay. Well, I certainly follow what you're saying about new meta, but I would like to know the ins and outs of it a little bit, because when you say it's backed by stock, what does that even mean? Like you're owning like a stock of the coin? I don't think you're telling me they're giving me Tesla stock for holding a random meme coin. I would assume that's not the case. But I do understand kind of the trends and things, Pump.Fun and Meta and stuff like that. I could see it being a trendy idea, but what's the execution? And most of those things will probably rug pull on you and run off with all the capital anyways. Yellow card, a Pan-African fiat to crypto gateway, stablecoin payment infrastructure provider. So is this the on-ramp for Africa into cryptocurrency? Let's see who thinks this is a good idea. Coinbase Ventures put some money on the table. Polychain put some money on the table. Blockchain something. I've seen that symbol before. I forget what it is. Andreessen Horowitz. They put some money on the table. In Galaxy, 5 tier 1s have thrown down. 5 tier 1s is how you get to 129.5 million in money raised here. There's not a whole lot to say. It's an on-ramp for Africa is basically what it seems like. Pan-Africa. This XFE is a newer project. There is a token generation, which is odd because a lot of the stuff that we look at is in the seed round or a funding round. XFE is a real-world asset ecosystem with tokenization platform, staking vault, and investment funds. Chocolate Salty says, I myself am confused by it. Okay, well, if you're confused by it, then it must be confusing. I just saw the coins moving, so I just took a quick look at what they are, not a deep dive. All right, well, maybe that's a bonus thing we could do kind of here at the end of the stream if we have time. I like to see when the meta kind of changes and what people are into changes, right? The narrative. But that doesn't always mean that it's a good thing and that it's going to last very long. Sometimes it's not the best narrative and it doesn't last very long. It goes away about as quick as it came. We'll see how it goes. Let's give it a week and see if those things are still even relevant. AI-driven DeFi protocol providing liquidity, infrastructure, and prediction markets. Fortune protocol, kind of a perfect name for a prediction market kind of thing. And again, it's AI-driven DeFi protocol providing liquidity infrastructure for prediction markets. So this doesn't sound like it is a new prediction market. It sounds like it's all about liquidity for prediction markets. Focused on building robust liquidity infrastructure for prediction markets. Exactly. Moving on. Sky AI back on the radar for some reason. It's up 39% today, 1.3 years old. I liked it. CryptoRank tells you the age of a project. You could very quickly look and be like, oh, Mars Coin, 0 years old. That's new. Easy. Zillow. Now, like I said, I'm pretty sure Zillow is a very large real estate app in America. Pretty sure my wife has shown me many houses on Zillow. I don't know if there's any correlation or if somebody just was smart enough to use a name. It's an institutional digital asset and transfer agency platform for RWA tokenization. I mean, the actual platform here in America is where you list your real estate, so it would make perfect sense for them to be into RWA tokenization. Mosa says, wow, I just thought it was neat because it pays you back in stock. I didn't know that was a new meta. A new narrative, yep. But it is neat. I just want to know how it works, right? You got to know the ins and outs of things before I get too excited about it. But it is a cool idea. And we covered that the Zillow is a London-based fintech company. Interesting. The big thing about this is that Ripple is kind of their main backer and supporter that we know of so far. And we don't even know how much money they've given them yet. So it's very interesting. We'll see how that goes. Keep that on the radar. We got Blockspace. Now, I don't know if this is a different project, but we've looked at another project called Blockspace, but I don't think this is the same thing as this one here. Let's take a look at our investors. Blue Yard Capital's in the lead, but I don't think that they're a top tier. For-profit. Very important. For-profit Ethereum infrastructure company optimizing the out-of-protocol transactions pipeline. Out-of-protocol transaction pipeline. That's probably worth reading a little bit more about because I don't know what the heck it's talking about. Up to date on the chat. Blockspace is a for-profit Ethereum infrastructure company dedicated to researching, building, and maintaining out-of-protocol software. What is out-of-protocol software? That is a very strange term to me. Created in tandem with open source Blockspace Forum. Now, first of all, Blockspace is the name. It's the space inside a block filled by transactions due to a validator picked them up out of a mempool. I hope you understand that. The name of it makes sense, but where we're going with this, I don't know. The company focuses on improving the economics, robustness, and performance of Ethereum transaction pipeline, particularly in preparation for major network upgrades like enshrined proposer builder separation. I know you guys know all about this EPBS. You guys have been studying it day and night. The company business model is strictly aligned with Ethereum ecosystem, monetizing entirely in Ethereum. By operating infrastructure and participating in the network staking, Blockspace earns fees from the transactions included in the blocks it produces, subsequently compounding those earnings. To migrate centralization risks, the firm has committed itself to a self-imposed cap, pledging to hold no more than 15% of the network's total stake. 15% of Ethereum is a lot, but I understand why people would be like, okay, well, we can't allow you to centralize all of Ethereum, right? 15% is a lot for a cap. I'd like to see their cap more like realistic. I'd like to see it like at like 5%, but they're not going to ever go for that. 10% would be better, but whatever. 15%, I guess we'll have to roll with that. I don't know that I'd like to see this Blockspace company own 15% of Ethereum's, staking. That doesn't sound like a good idea. Too much centralization. Then we have this Lacido, regulated infrastructure platform for fund tokenization and digital collateral on XRPL. So this is two projects that we're looking at, both completely funded and backed by Ripple and nobody else. Also, both of them, you got to be able to put this together, follow the money. Both of them London-based fintech companies. So why is Ripple taking a very specific interest in London-based fintech companies? So, platforms for tokenization of traditional investment funds and secured finance. The platform enables asset managers and financial institutions to digitalize real-world assets such as money market funds and using distributed ledger technology, XRP. Lacido offers an end-to-end technology framework that includes legal structuring, digital custody, and secondary market infrastructure. That's probably all we need to know about that. We went over that yesterday, so I won't spend too much time. V12. All right, V12 is an autonomous AI security agent for auditing smart contracts and mission critical code. Everybody's all about AI finding exploits. They've raised about 10 million. Makes sense to build a company out of it. It's pretty genius as long as it actually works. Built by the founders of blockchain security firm Zelic, so maybe they have some understanding of how all of this works. Again, understanding your founders, what their backgrounds are, can really let you zone in a little bit on if something is going to do well or not. Zach XBT, huh? Like the actual guy from YouTube? Is an angel investor, huh? I don't really know a whole lot about him other than some of the things that he's covered on YouTube and things like that. But him being an angel investor does give him some kind of financial interest in things. So always keep that in mind. Kima raised $660,000, not a lot of money. Kima is a market neutral yield on Solana built on the network's perpetual exchange with a true funding rate, they say. Solana native fixed income protocol. It combines an on-chain perpetual future exchange and delta neutral yield vault and a tokenization layer that splits yield bearing positions into principal and yield tokens so the traders can lock fixed rate speculative on funding and earn passively. Sounds interesting. Doesn't seem like they're getting a lot of attention here for their token sale. See any of these other ones? None of these other ones are really worth looking at. Let's take a look at Impossible Cloud Network. I just want to read the description. A multi-service cloud platform. All right. And let's move into our education here about HEX. Who here likes HEX? Drop a 111. Or likes the entire Richard Hart. Okay, not Richard Hart. the whole Pulse Chain HEX ecosystem and the idea behind it, drop a 111. If you absolutely hate all of it, drop a 555. Let's see if we get anybody even to participate. HEX staking is actually time locking more than just staking. The first classroom distinction is between consensus staking and an application level staking. We're about to go deep here. I hope you're ready. Pulse chain validators use PLS to participate in securing the network. Ethereum validators use ETH, just as a comparison. HEX staking does neither of those functions. A HEX user chooses an amount and commits lasting between 1 day and 5,555 days. The smart contract then converts that commitment into accounting shares. The HEX committed to a native stake cannot be sold, transferred, or used elsewhere during that period. Ending the commitment early is possible, but may carry a substantial penalty. So think twice before you lock something up, especially what is to you a lot of money. Think twice before you lock that up for a long period of time. Remember, 5,555 days is a long time. This is why time locking is often the more accurate educational description, even though HEX staking is commonly searched phrase or a commonly repeated phrase. It's different. Staking from time locking, not the same thing. What happens when a native stake begins? When a native HEX stake begins, the selected HEX is actually burned. That matters because the user is not simply depositing liquid HEX into an account, the way a lot of other staking would work. The contract records information including the wallet controlling the stake, the amount committed, the starting date, the promised ending date, and the number of shares assigned, all wrapped up in a smart contract. The user's claim now depends on that contract's record. When the stake is properly ended, the contract calculates the eligible principal, rewards, and any penalties, then mints the resulting HEX. Rewards accumulate in the contract's accounting, but the new HEX is not being deposited into the user's wallet every day. What a T-share actually represents. So now we're going to move on to T-shares. Melissa says, I love Pulse Chain. Ecosystem 111. All right. Struggleheart just says he is bullish. That's what I got from his emojis here. So what does a T-share actually represent? HEX uses an enormous base number of shares. One T-share means 1 trillion of the internal shares. A T-share, the T I guess meaning trillion, is best understood as a unit used to divide the daily payout pool. A simplified version of the calculation is this: your daily HEX allocation equals your shares divided by all active shares times that day's payout pool. Could sound a little complicated. You might want to use a calculator for it. Two people could lock the same number of HEX and receive different shares because their stake length differs or because they began when the stake rate was different. T-shares are not company equity. All right, they're not actually shares of HEX or Pulse Chain or any of that kind of thing. They do not represent legal ownership of HEX, in case you come from the traditional world where a share is some kind of ownership. Pulse Chain or its businesses, they are a smart contract accounting unit in that alone. The share rate creates a ratchet. The share rate determines how much effective HEX is required to receive a share. When a successful stake ends with enough additional HEX, the contract can raise the share rate, so someone starting on a comparable stake later cannot simply recreate the earlier results using the same amount and duration. The important feature is that the share rate does not reverse. That produces a ratchet. Earlier stakes may obtain shares at a lower rate. Later stakes may require more HEX to obtain the same amount of shares. Longer commitments can compensate by receiving a larger effective HEX calculation, and existing shares maintain their role until that stake is ended. The phrase T-shares are getting more expensive does not mean the T-share trades on an open market. It means the contract requires more HEX to create the same internal accounting power. Are you guys following along? Who understands what's being said here? I could see how this could be a little complicated if you have never looked at any of this stuff before. Longer pays better and bigger payouts. So the longer you stake, or time lock, as we're trying to make that distinction for you, the better the payout is. Before applying the share rate, HEX adjusts the effective amount using time and size bonuses. Longer pays better, rewards longer commits with, okay, I read that so weird. Longer pays better, rewards longer commitments with more effective HEX. I feel like that was written very confusingly. The native bonus increases with duration and reaches its maximum and appropriately 10 years. It's a long time. Even though a stake can run for as long as 5,555 days. I don't know who created that number. This is a very specific number. So bigger pays better provides a smaller capped bonus for very large stakes. Let's see, Coin Fabric's economic review examined the longer stake design and concluded that under the reviewed parameters, longer stake generally receive more HEX than repeatedly compounding shorter stakes using the same reward. So what it's saying here is doing like a 1 year stake and then doing a 1 year stake again and just repeating that every year for 10 years or every 6 months or every month or whatever isn't going to compound you more value than just locking it up for 10 years if that's what you plan on doing. However, more HEX is still the key phrase. A larger token payout does not guarantee a better dollar outcome after accounting for price, time, and opportunity costs. Another way to say this, and I'm just making up numbers, if you have 1,000 HEX and you lock it up for a year and you have 1,500 HEX after that, but the price of HEX drops 90%, you did not make any money. You might have helped by having 500 more HEX, and again, I'm just making those numbers up. That would be a 50% APY. But here's the basic knowledge. If the price of the token you're getting paid in is falling, your outcome of making any money for what you're doing is also falling. And you basically need to hold it and hope it keeps going up, or it turns around and goes up, right? Maybe you're in the bottom of a bear market like I believe we are right now. Where the daily payout comes from, though. So the main source is HEX inflation. After the first year, the protocol's maximum annual inflation rate is 3.69% of the token supply. That newly issued HEX is allocated through the staking share system rather than being distributed equally to every holder. That creates an important redistribution effect. Active stakes receive inflation. Liquid holders do not receive staking payouts. Unstaked holders experience dilution relative to the participation receiving newly issued HEX. Penalties can add extra HEX to the payout pool. So if people in their stake early, it can mean better payout for everybody else. Melissa says, what if you just bought HEX and held it for years and don't lock it up? Well, then you're just receiving whatever the market does, right? If you just hold HEX, like I bought some HEX a long time ago, it didn't do anything, didn't stake it, didn't sacrifice it for Pulse Chain or any of that. It's worth whatever HEX is worth, right? And that's more of a market function, I feel like. Now, these things come into, they matter, but like it just said here, unstaked holders experience dilution relative to the participating are the participants, people participating, receiving newly issued HEX. So if you're just holding it, you're probably being diluted. So it's probably better that you stake, and I think that's the whole point here, is they want people to time lock HEX. But that is not a permanently fixed APY. The results depend on total shares, stake duration, and penalties, and a broader supply state. So what I would say here is, even though it's not technically staking, it is time locking, it's almost more confusing as far as calculating an APY. So why 38% APY requires context? HEX has historically been marketed using high average APY figures. That percentage can be misunderstood in many ways. First, it is generally a return calculated in HEX, not dollars. So that 38% is in HEX, not value, because obviously if HEX goes way down, you're not going to get 38% APY. But you might get 38% more HEX in your wallet, which if you're holding long term could be highly valuable. Again, highly risk reward kind of thing. Second, it may assume a particular stake length or participation rate. Third, it may exclude the market price change between the staking beginning and end, meaning the value of the actual asset could fluctuate. Fourth, it may not fully communicate the gas costs, penalties, liquidity, or inability to deploy the locked capital somewhere else. Suppose a stake begins with 100,000 HEX and eventually produces 130,000 HEX, meaning you're up 30,000 HEX. That is a 30% increase in token quantity. But if HEX market price falls 70% during that period, the ending dollar value can still be substantially lower. That is diminishing returns. The contract controls token accounting. It does not control market demand. Early and late in staking penalties. A time commitment only influences behavior if breaking the commitment has consequences, meaning if you stake things for any period of time and you choose it and you put it in a smart contract, and then they just let you end your staking at any point without any penalty, then what is the point of having a time lock? It totally invalidates time locking in general. Ending early. The early end penalty considers the promised length and proportion of the commitment already served. Ending extremely early can eliminate accrued rewards and also may reduce principal, meaning your original investment may be taken, some of it, not all of it, but some of it. The longer the original promise, the greater the potential consequence of breaking it prematurely. This is why someone should not select 5,555 days simply because it generates more shares. A higher share allocation comes with much more liquidity commitment, basically saying you're going to look at the maximum stake on something and it's going to look like you're getting far more reward. You probably are going to generate more HEX in 10 years than somebody who stakes for 6 months. It's pretty basic math, but that doesn't mean it's a good idea for you. You should really calculate these things. Ending late. After a stake matures, there is a grace period. If no one processes that expired stake, late penalties can begin accumulating. So you could be penalized for ending early, and you could be penalized for locking up and then not paying attention, and being late can also be penalized. A contract function, commonly called good accounting, can be executed to remove an expired stake shares from the active pool and stop additional late penalties. It does not allow the caller to steal the stake. The controlling wallet remains the right to complete the ending process. So basically they're just going to stop it so that you stop getting penalized, right? And you could come and pick it up later and get your rewards with probably some kind of penalty. But the person who, or not the person, right? The wallet that stopped you from earning more shares or more penalties, it doesn't get to keep your contract. According to the HEX documentation, penalties proceeds are divided between the staking payout system and the original address. So Ethereum HEX and Pulse Chain HEX are separate. So that's two different types of HEX living in two different ecosystems. When Pulse Chain copied Ethereum's system state, the HEX contract and active stake records were included. At that moment, a person with active Ethereum HEX stake received a corresponding state on Pulse Chain. Afterwards, the two contracts continued independently. That means that starting a new stake on Ethereum does not create one on Pulse Chain, and vice versa. Starting a stake on Pulse Chain does not create one on Ethereum. Each network has its own daily payouts and share rate history. The two HEX assets can have different prices and liquidity. Ending one stake does not end the counterparty on the other. So if you staked on Ethereum and you end it, that doesn't mean your stake or time lock on Pulse Chain has been affected. Community members often use EHEX or PHEX as shorthand, but users must verify the selected network and exact asset rather than relying on a ticker or a symbol. NJ Dub says it's not 38% anymore. Certain things happen to lower it. That AI info isn't up to date. Well, it wasn't saying that you get 38% APY. I don't know, maybe you misunderstood it. It was saying that it has been commonly advertised. Time locking and things over the years has been commonly advertised as a high APY, as high as 38%. It didn't say that it is 38% now. Also, this all isn't something you're going to get in one day. Of course, this is a general introduction to HEX, Pulse Chain. We're doing a whole series all week, so I don't know if you saw yesterday's show where we kind of just first outlined it. Now we're going over HEX, and we'll continue to get into things like Pulse Chain and all of that stuff as we go along. But I just really want to make that distinction for J-Dub here, that this was never saying that the APY on HEX is 38%, right? That's not what we're saying. It was saying that it was commonly advertised as a high APY, and that APY was as high as 38%. Also, this isn't something you're going to get in one day. Exactly. It took me like 6 months to understand HEX staking, but once you get it, it's like a eureka moment. Well, it sounds like you get it, and I appreciate you being here because you can help clarify things. And hopefully you join our free Discord and hang out, because we would love to have somebody who really understands a lot of this stuff in our community. Native stakes versus wrapped stake products. A normal native HEX stake is associated with its controlling address and is not designed as a transferable asset. Third-party applications can create contracts that open HEX stakes and issue transferable tokens or NFTs representing control over those positions. That may add flexibility, but it also changes the risk. A native stake primarily depends on HEX, depends on the HEX contract, that is, and the underlying blockchain. A wrapped or tokenized stake may additionally depend on another smart contract, a wrapper administrative design, marketplace liquidity, front-end availability, and correct ownership transfer logic. HEX staking does not always refer to the same product. Viewers should determine whether they are interacting directly with a native contract or another protocol built around it. There is some complexity there, right? So the complete HEX risk stack, and we're going to come back to this in a minute and to wrap things up, but I just feel like we need a break for a second. So let's jump over to the daily news. So the Clarity Act is stuck on Trump's ethic language. And remember, these are news stories written by people like CoinDesk. So who knows if it's got any legitimacy to it at all. Are we caught up on the chat? We sure are. I'd like to do that eureka moment when it comes to HEX staking for sure. So the Clarity Act is still sitting idle. Crypto regulation is close, but the Trump conflict of interest issue may still derail the bill. What does that even mean? I'm not really sure. Elizabeth Warren and Richard Blumenthal asked the SEC to investigate Trump's meme coin, pointing to estimated investor losses of around $3.8 billion and Trump's reported $639 million token-related gains. All right, so first of all, the story is nonsense in the fact that Trump himself as a person didn't launch Trump coin, all right? And he also, as a person, as an individual, did not make money off Trump coin, okay? And I'm not here to try to defend Trump in any way, shape, or form. I'm just saying, they always try to act like, he launched that token himself. Do you think Trump knows how to launch a meme coin and things like that? No. It has to do with other people who use his name and affiliated businesses and stuff like that. Senators want the SEC to investigate Trump's meme coin. Cool. We'll let them do that, and we'll see what they come up with. It did definitely damage the market, and I'm not going to make any ifs, ands, or buts about that, the market basically got destroyed by the Trump coin. But is that Trump coin's fault? He launched a coin, and everybody went and sold everything. You got to have a good crypto IQ. And maybe there was things, I just want to say this, maybe there was some things done wrong with the launch, and maybe they did rug pull on everybody. But the point was, nobody made all those people go into their wallet, go into their Coinbase, go into their Kraken or Robinhood account, sell all their assets, and buy Trump coin. Nobody made them do that. They did that on their own behalf, number one. Number two, if you're an investor, what do you think happens when there's a really hot project and everybody rushes into it? The people who got in early sell. They sell on you, and they make a huge profit off of all of you guys running in at the end of it. Just like, hey, figure this out. Just like any other crypto ever. All right. So if you came in, you bought Trump coin at $70 or $50, whatever it topped out at, then you bought the top the same way anybody buys the top in a bull market. My whole point here has nothing to do with Trump or Trump coin. It's just that, that's how crypto works. If you're late to the party and you buy the top, and the people who got in earlier are ready to take profits, you get dumped on. Welcome to crypto. Sounds to me like when it came to Trump coin, a lot of traditional investors and people who are not privy to this market made a really bad move, and people dumped on them. Prediction markets may get dragged into the Clarity Act fight. And of course, there's all this stuff about prediction markets. Polymarket is reportedly chasing a $20 billion valuation. Good for them. I don't really care one way or the other for prediction markets. I'm not against them, not really for them. I could pretty much care less, about the same way that I care about betting on sports, right? It just is not my cup of tea, not something I care about, but I know a lot of people who bet on sports. Good for them. I like things that they don't like, right? Like crypto education. Samsung could become a major stablecoin distributor. Stablecoin adoption may happen through phones and wallets, not just exchanges. Makes sense. Makes perfect sense to me. I am using the shortened version down here of things, right? This is a major South Korean story that Samsung's Upbit connection makes this bigger. Wallet distribution plus exchange infrastructure plus possible dollar and won stablecoins. Wells Fargo is joining the tokenized deposit race. Banks are building their own blockchain money rails to compete with stablecoins. Best of luck. If a bank builds blockchain money rails, then they're just another stablecoin, right? That would mean Wells Fargo would have their own stablecoin. They're not really doing something secondary to stablecoins. They're just building their own stablecoin, right? Tokenized deposits versus stablecoins is becoming a major banking war. Again, if your deposit is tokenized and it's on a blockchain, I don't think it matters that much if we call it a stablecoin or we call it something else. Doesn't really matter. So stablecoins have forced banks to move faster. Well, thank goodness, because banks are notoriously slow. Now banks are responding with tokenized deposits. Good. Make the banks do something. They're archaic. Says thank you, J-Dub, for the sub. Hopefully you will come join us in the future streams when you can. Exactly. He says, excited to see you checking out the ecosystem. Community is very knowledgeable and welcoming. I'm sure you'll get more peeps here as time goes on. Sub to you. Well, thank you very much. I appreciate you. NJ Dub. I'm just going to call him J-Dub because I like that. I appreciate you coming through and showing some love to the channel and also giving us a little bit of knowledge and advice about Pulse Chain and its ecosystem and stuff. We'd love to have that continually because we really need people in every facet of crypto to help educate other people and also to lead the way and give us knowledge when we need it. We want to work as one big community here and not just look at me, I'm so smart up here on YouTube. That is not the idea of underground crypto. So OpenUSD scared Circle, but the threat may be more complicated. Now we've been watching this story develop. All I see is Circle had, I'm not going to call it a monopoly, but I mean, Circle was a first mover advantage. They were in this game USDC and they didn't really have a lot of competition because of regulation. Now that regulation is being sorted out, other people are getting into the market, which is a threat to Circle. Did they not see that coming? I mean, they should have saw that coming. I would be willing to bet that they did see that coming, but they might not have expected so many big players to come into the space. OpenUSD may not kill USDC, I doubt it will, but it shows stablecoin distribution is becoming brutally competitive. Competition is good for the user because that kind of competition is going to be like people decide to use USD because it has a lower fee, or people decide to use USDC because it has a lower fee, and if they brutally compete with each other, we'll get it to the point where the fee for moving things around is almost nothing because they want the money. All right, some money is always better than no money, right? Visa and MasterCard are not picking one stablecoin winner. The bigger theme here is payment networks want their own rails, not to marry one token. That hurts some of the narratives you've heard before, but everything's pretty much going to be available, right? Not just one. Shrugga Heart says, good stuff. Hey, I appreciate you saying that. We do our best. And the Denari is bringing tokenized US stocks to American investors. Denari is bringing tokenized US stocks to American investors. Okay. Tokenized stocks are moving from offshore experiments towards regulated US assets. Denari's model keeps real stocks underneath the tokens. This matters because tokenized stock race is splitting into different models: issuers, sponsored stocks, synthetic exposure, and custodial one-for-one wrappers, which I think is the one I like the best. You own a tokenized stock, you own the actual stock, basically, and they are almost the same thing. Anything else is kind of counterfeit. Anything else I don't understand the point of. Like, if there was a good stock and I wanted to own it, and it had a dividend, right? Say it had a dividend attached to owning that stock. Not every stock has a dividend, but let's just say the one that I want to buy has a nice dividend, and I'm going to put $10,000 in there, right? Why in the world would I buy a tokenized version of that stock? That dividend alone could pay me all my money back. ROI is usually about 10 years if they don't screw it up. And they usually screw it up, right? But why would I buy something that has a dividend to it? Why would I not buy the actual stock and get a dividend, is what I'm trying to say, versus buying a tokenized stock that gets no dividend? Now, another thing is, if it's a stock that doesn't have a dividend and there's no value to owning it legitimately versus tokenized, then I guess it doesn't matter. So everybody's got to address that accordingly. Ethereum researchers propose burning validator rewards. I'm sure the validators are real happy about that. Ethereum researchers, including this Justin Drake, proposed a tapered issuance burn that would burn the rising shares of validator rewards as more ETH gets staked. If roughly 50% of ETH became staked, the burn would cancel out consensus layer issuance rewards. Ethereum is debating whether too much staking could actually hurt decentralization and security. I'll read that again. Ethereum is debating whether too much staking could actually hurt decentralization and security. Great. That's what we need for Ethereum. They went proof of stake and then they tell us, hey, maybe proof of stake is bad. Well done, Ethereum. All right, let's get back to this a little bit. So the complete HEX risk stack. Yes, I'm glad to see there's 13 people still here with us. We are a little heavy on the education this week, but that's what we're here for. That is how you raise your crypto IQ. If you were in college, not saying that this is a college level course or something like that, because I don't know if legally I could say something like that. But I will say, you wouldn't get like a month into it after they are done with their introductions and be like, this is too much thinking. So if you're here because you want to be better in this market and understand what's going on, lock on in. The complete HEX risk stack. A serious evaluation should include more than a smart contract operation. Market risk. HEX can issue rewards exactly as coded while losing market value. Duration risk. Capital locked for years cannot respond easily to emergencies or opportunities. If you're locked up, right? And it's probably never going to be really worth the penalty of ending early your time lockup. Liquidity risk. A displaced market price does not guarantee that a large position can be sold near that price. Gas and execution risk. Starting and ending a stake requires on-chain transactions. Long-running Ethereum stakes may require more computation when being processed. A penalty risk. Choosing an unrealistic duration can turn the protocol's reward system into a source of loss. So think twice before you stake that anything. That kind of goes for a lot of different things, but specifically this HEX. Concentration risk, because again, penalties for ending your stake early is not a HEX specific thing. That's all over the place in the world of time locking or staking, liquidity pools, all of that stuff. It's not a new concept, let's put it that way. Concentration risk, large holders and origin address, and concentrated liquidity can materially affect the market conditions. You have inference risk or interface risk. A website is only an interface. Users should verify networks, contract addresses, and transactions rather than assuming every HEX branded page is native or even legitimate. So watch out for scams and non-native products. Opportunity cost risk. Even if the number of HEX increases, the locked capital may underperform other opportunities available during the same period of time. This is one where it's kind of like you never really know until later, right? Here's a good example. There's two tokens. They both look pretty good, but you just want to buy one because you don't want to break up your capital. So you buy one. The one you buy, and for some reason it always seems to go this way, the coin you buy does 10% gain, and the one you didn't buy does a 1,000% gain. And you think, dang, I should have not bought that other one. Now, imagine the one that you bought that only had a 10% gain had some kind of staking that you participated in, and you locked it up for a year. And in that year, the other coin that you didn't buy goes up 1,000% or 10x. That's basically what we're saying here. You had the opportunity to buy the other one, you didn't. So you made, in retrospective, in hindsight, the not as good as you could have done choice. And that's called an opportunity cost risk, right? It's just an opportunity risk, right? But that's always everywhere I mean, look at Cash Cat. Did you buy Cash Cat? Well, then whatever you did buy was an opportunity risk because you could have bought Cash Cat. I hope you understand the point there. Melissa says, it's good stuff tonight. The learning about HEX. Very complex chain to understand. Worse than the Caspa ecosystem. Right, exactly. And that's the whole point. You know, I already committed to a week of this series. But depending on where we kind of end on Saturday with it, we may very well do another week and see how that goes. So the honest verdict on HEX yield. The HEX contract can enforce a time commitment, calculate shares, T-shares, and issue tokens without relying on bank or centralized administrator, kind of the calling card to decentralization in general. That is the technical accomplishment. The economic outcome remains uncertain because the contract does not guarantee future buyers deep liquidity, stable purchasing power, a favorable exchange rate, that a user selected an appropriate commitment, or that a reward outperforms other assets. The most accurate statement is not HEX guarantees passive income. It's HEX uses programmed inflation, penalties, and time-locked shares to reward users that with additional HEX for completing a chosen commitment. That market determines what those rewards are worth. So here's how I want to say this. Here's how I want to go about this to simplify this for you. And this is just from me also learning this with you as we went along, because I didn't know a whole lot about this prior. Some things that we do series on, I have done a lot of digging into or just generally know about them for one reason or another. And other times, like a topic like this, I don't actually know a lot, and I'm learning right alongside you as if I was somebody who didn't know anything about it. Anyways, my point here is you time lock HEX and your reward is more HEX. Again, I use the example, let's do 38% because that's fun. All right, but that's not what we're saying the APY is, just to be clear. So you put 1,000 HEX in, you come out with 1,380 HEX. If the price of HEX did well in the time it took you to do that, let's say 1 year, then you made money. If the value of HEX fell 70%, 80% because you went into a bear market, then yes, you got more HEX. And if you hold that HEX, you'll probably have more money than if you never staked it at all. If the price goes up later down the line, depends on how long you plan on holding it. But if you undo your time lock, receive 1,380 HEX because you started with 1,000, and then you sell it immediately, you lost money. You didn't make money just because you had more HEX. So you got to think about your goal and your idea. If you believe in 10 years HEX is going to be worth 10 times or 100 times, whatever it is, you believe it's going to be worth more than right now, then I think that time locking HEX is a no-brainer because you're going to earn more HEX. You're putting your HEX to work. If you think that there is a good chance that HEX is going to fall into complete irrelevance in the next 10 years or 5 years or 3 years or whatever you're thinking, then it doesn't really matter how much HEX you have. Do you understand the point? Like, if HEX is not going to do well in price, it doesn't matter how much HEX you have. It doesn't matter if you quadruple your bag. If that only gets you back to break even, there's no profit there. So how you feel about HEX as an asset, as a token, is really what should be determining whether you want to time lock it or not. Now, I bought some HEX a long time ago, and I didn't even realize that I could time lock or quote unquote stake HEX. I mean, I'm sure I probably could have, assumed that somewhere you could do that. But my point is, I've let it sit there in that wallet for forever and never really touched it. That's on me, because I didn't really think a lot about it. It wasn't a lot of money to me, and I don't use the HEX ecosystem. And then we moved on to Pulse Chain stuff, and I really didn't understand it. It's a big part of why we're doing this series this week. Now let's jump back to the news. And just everybody who is a regular here, just double check for me that you smash that like button. I would appreciate it. The Ethereum proposal is already controversial. Wow, you don't say. Validators don't want you to take their money. Who could have saw that coming? I definitely couldn't have seen that coming a million miles away. Supporters argue that a plan could reduce inflation and limit overconcentration among big staking providers. Critics say it could also hurt solo stakers. Liquid staking tokens like STETH, DeFi yield strategies, and Ethereum's long-term security. Aave Lab CEO Stani Kolchev said the proposal could be harmful for Ethereum. Okay, well, duh, because any kind of restaking or just any kind of protocol built around what is already the dynamic or consensus, the way it already runs, if you change it, it's going to mess things up. I mean, that's pretty obvious. They should give people a really big heads up and allow people to rather pull out. Like, maybe if you're in here's a good example. If you have a penalty for ending stake early, but then Ethereum decides it's going to change how it does things, maybe just do away with the penalty and let people pull their money out, right? Wow, that sneeze came out of nowhere. All right, BlackRock's Ethereum ETF will do a reverse split. One of the number one reasons why I cannot stand stocks is all of the splitting of shares. I can't stand it. It just like is a way where they dilute the value, but they don't compensate you for it. And I'm not going to act like I'm any kind of expert on, splits and reverse splits and all these because I'm not. But I do know that it's primarily used to dilute the value of the stock you're holding, and it only benefits the company that issues the stock. Okay, BlackRock plans for a 1-for-3 reverse split for its spot Ethereum ETF, ETHA, in October 6th. So that's literally in 2 days. Or wait, no, not in 2 days. What am I saying? It is not October. It is August. Ignore that. The split does not change investor value or fund assets, but it raises the per share price and may reduce trading spreads. And they do these things for complicated reasons. I'm not going to say that they're always bad, but they do have an effect. And if you're holding these type of things, you really have to understand what what splits do. And of course, a reverse split is the opposite of splitting. Why don't they just call it something else? I don't know. ETHA or ETHA is still the largest spot ETF with more than $5 billion in assets under management. Again, that is BlackRock's ETF. Ethereum ETFs are becoming more mature trading products and not just launch hype. BNY is adding staking to institutional custody. Been doing a lot of talking. I can feel myself kind of running out of steam here. This is a major institutional story because staking is being packaged into traditional custody infrastructure. BNY plans to add staking into its digital asset custody platform through Galaxy, which we have seen many times as a tier 1 investor. Who talks about angel investors, and tier 1? What's the, all of a sudden I can't think of the name. All right, we're moving on. But anyways, who talks about this stuff other than Underground Crypto? What a bad time to forget your words. BitGo is removing WBTC cross-chain infrastructure from Layer 0 and Chainlink. Okay. Why is this important? Cross-chain security is becoming an institutional infrastructure battle. Cold Card says its wallet exploit is still active. The clean read here is this is not a normal hack. Bad randomness and seed generation can make wallets vulnerable without attackers touching the device. To me, it seems like this is only people who have Cold Card. Cold Card urged users to move funds because of an exploit tied to a weak seed generation is still ongoing from 2021, it seems like, which is weird. CoinDesk says the issues have drained up to about 114 million from self-custody wallets. A huge problem, very sad, but relatively very small amount of crypto, right? 114 million is not a lot of money in the market, right? Not to an individual person. Self-custody wallets and affected certain MK3 devices set up on firmware 4.0.1 or later, plus the MK4, MK5, and Q devices on older firmware. Wallets created using dice roll method are considered safe. So we know there's many cold storage companies, right? There's Ledger, there's Tezos, there's apparently Cold Card, there's all kinds of them. There's more. I've seen more of them lately than ever before. So this sounds like this company, and somebody correct me if I'm wrong, because I keep meaning to get deeper into this. Life's busy. What can I say? Cold Card sounds like a company. They had a weak seed generation, right? Generating your seed phrase for your Cold Card product was weak, and therefore people could exploit it. And they drained 114 million. Does that mean if you own a different cold storage device, like a Trezor or Tezos or something, does that mean you're at risk? I don't know. Did they have a weak seed generation? I don't think you're at risk, just to put your mind at ease. Personally, but I'm a random guy on the internet, so don't, do your own research. That's a big part of what this channel is. But my point here is, this seems to be very tied to a specific company, Cold Card, and not like a type of technology that's used by all cold storage, because if it was, there'd be a heck of a lot more than 114 million wiped out, right? So I just kind of want to, I've seen quite a few people, I have people messaging me about it, and I think it's unfortunate if you own a Cold Card product, and I believe that is its own company and its own cold storage company, right? Buy something different and get your money off of it. That's the only thing I can tell you. Again, I had people messaging me about it, so I really wanted to be clear about it, although I highly doubt that they are watching my channel. People love to message me, but they don't love to come raise that crypto IQ. Cloudflare is rolling out stablecoin wallets for AI agents. AI agents are getting crypto payment rails, but the key feature is spending limits so bots do not run wild. Again, we've talked about this. Bots and AI agents, agentic networks, all that stuff, it is coming. It is here, really, but it's going to evolve more. The biggest thing is putting parameters around them so that they can't mess up all your money. I would not think it to be a good idea to put a large amount of money into these things, especially in the early days. Cloudflare's wallets uses the X402 payment narrative. I think that's a weird way to put it. It's not using a narrative, it's using an HTTP protocol called 402. I don't know why you would say it's using a payment narrative. It's just using a payment protocol. It's written very weird. South Africa is drafting rules for cross-border crypto transactions. Global regulators are tightening cross-border crypto flows, especially around capital movement and illicit finance. Is that going to stop the illicit people? Probably not. And that's kind of the end of our news today. Thank you for coming to the Underground Crypto Deep Dive Show. It has been a wonderful show. I'm not ending it just yet, but we are going to move into the Underground Crypto Hangout part of the night. And how's everybody doing out there? How did you like the series? I know Melissa liked it. Anybody else? Was it too intense? Do you understand anything about time locking HEX more than before we started? Somebody's sitting out there going, that was all very complicated. And I think I know less than before you started. And that'll happen sometimes. I tell you, there's many things in my life that I have learned that you just have to believe in yourself. That's how I'm going to say it. Because there's many things in my life I had to learn that day after day after day, whether it was in a job or it was something that was important to me to learn even though I wasn't getting it. And day after day, I showed up and tried to learn. And it just wasn't clicking. Until one day it finally clicked. And that's just how it goes. Let's sell everything for BNB here. Continue to stack our BNB bags. So sometimes you just have to have faith that you're going to get it, even if you don't get it. And that's how you get to the point where you get something, right? That's what I'm trying to say. If you don't believe in yourself like that, then you'll quit, and then you really never will ever get it. And that could directly influence your life. Struggerheart says, I'm just tired out, but it's a great start on it. Appreciate you saying that. And hopefully over the series, maybe you'll catch a day where you're not as tired, and it'll start clicking. Melissa says, complicated, but I understood some. Thank you. Hey, if you get a little bit, I think that's what I was really trying to say there with the just have faith. If you just can pick up a few details every time, then it'll click. Now, I felt like I understood the whole time locking hex and everything. I felt like I understood that pretty well. Do I feel like at this moment I understand the hex ecosystem or pulse chain ecosystem and how they all correlate? No, not at all. I'm here learning with you guys, just like you're here learning with me. And I think that that's kind of the beautiful part, is sometimes I am going to be able to sit up here with a deep knowledge of a topic and give insight. Like sometimes I'm going to be able to do that. Sometimes I'm just going to learn with you guys, like anybody else who randomly came to the show and saw the topic and was like, I want to know more about this. And I really think that that adds a beautiful dynamic, if I could say it that eloquently, a beautiful dynamic to this show and to this community. What is going on? I got otter food. I didn't even know otters existed in this game. I don't need otter food. I need otters. This is Chainlink. This is Chainers. Chainers, I think, should have some correlation with Chainlink. I think it would just be good marketing. Because you saw how quick I messed up what I was saying. Let's go do the mini game. Now, I've been having a ton of fun playing Sunflower Land, playing Kindra. And again, as I always say, I feel like the DeFi gaming is a perfect correlation or combination to crypto education, because DeFi games are fun. Raising your crypto IQ is, in my opinion, highly necessary, but sometimes a little overwhelming. So you got to break it up with some DeFi gaming. I really wish I had more time in a day. I wish, I'm just thinking out loud and I'm transparent. I wish that YouTube paid a little bit more and stuff for ad revenue. It's pretty minuscule, right? It's not a lot. And our community's not huge, so I'm not like making a ton of money off of super chats. As I say that, a super chat just rolled in. Melissa says, great info and thanks for looking at Contra. You're absolutely welcome. Thank you for the super chat. Highly relevant to what I was saying. But my point is, I'd like to do like DeFi gaming streams and all of these other things. There's just not enough time in the day. Bills got to get paid. But over time, as I always say, it will come. And we'll have whole DeFi gaming streams. I look forward to being able to focus on crypto content. I don't know if that day will come in this next bull market, but I do have a feeling we will grow substantially in the bull market as people's attention rolls in. You know, there's a pro and a con to being early. I feel like I'm extremely early to crypto education. I don't know. Are they going to require me to have a degree at some point? I doubt it, because I'm not teaching like finances, financial education necessarily, just crypto blockchain type stuff. But anyways, we'll see how that goes over time. But I think I'm super early to it. That could have huge risk reward, right? If crypto changes drastically and nobody cares for whatever reason, well, that'll be problematic. Or it could have huge reward. If it becomes super mainstream and everybody wants to raise that crypto IQ, well, then I could be in a great position, right? So just like anything, it's all risk reward. Again, I'm always thinking out loud when I play this game because I can't really look at the chat. Thank you again, Melissa, for that super chat, though. Highly appreciate that. And don't forget, crypto is ever changing too. Exactly. That's why it's good. See, this is one of the things that I would like to say on this front is that having a good crypto IQ sets you up to understand things at a deeper level as they evolve, because if you understand how something originally worked, like Bitcoin, then you understand Ethereum a lot easier. And if you understand Bitcoin and Ethereum, well, then you could understand, say proof of useful liquidity or some other type of consensus or some other type of network, Caspa, whatever. It's easier to understand. Where if you just come in and you're trying to understand Caspa's proof of work and you're completely new and maybe you saw somebody talking about Caspa online or something, well, then you're going to be really confused because you don't understand anything that got this technology to where it is today, right? All right, I'm crashing out, but I'm going to let them take me out because there's no real point in playing this game for a long period of time. But anyways, it always pays to understand the foundational levels of something. And, when I started this stream, I set lofty goals. That's just who I am as a person. You guys will come to understand that over time. My mentor, the crypto lifer, a lot of times said if your goals aren't so big that when you tell them to people they laugh at you, your goals are way too small. And I really, really took that to heart. I really do believe that. So when I set out to make a channel about crypto education, especially in an environment where I know a lot of people, they just want to see the price go up. They don't care about how a blockchain works. That is the truth. I accept that. But that doesn't change that I want to be one of the most highly educated people in crypto. Understanding, and I mean more well-rounded. Anybody could take one very specific category and be the best in it. I want to be the most well-rounded, understood cryptocurrency, blockchain, history, whatever in the world. Will I ever reach that? I don't know, but I'll tell you one thing. If I don't try, I never will reach it. So that's just something for myself that I set out to do. And I knew in order to do that, I was going to have to educate myself every single day. The compounding interest of this show, if you will. Melissa says, and if they make you take a test, I bet you will be the only guy out there that will pass and ace the test hand down. I hope so. And for me, the test would have multiple choice for me to pass. That's pretty funny. Yeah, you got to set lofty goals. And one of my goals is definitely to be highly educated in this space. Now, to be honest, the quote-unquote most knowledgeable person in the world, that doesn't really mean a lot to me. I don't think that is a big deal. I could wind up being, but I don't think that's the point. There's too many super smart people out there. The point is more to be highly educated. If I'm in the top 10%, hey, I'm good with that too. But I won't be any of those things if I don't show up every day and do the show. So I encourage you guys to come along with me in the journey. If you're watching this later, smash that like button and consider raising your crypto IQ. At a basic level, I really feel like it will make you a better speculator in the market. And if you're going to be in this arena, of cryptocurrency and things is going to evolve and be highly relevant, say, into the next 100 years, well, you're going to get scammed a lot less if you understand how things work. If somebody tells you that they're going to do something and you already know that that's pretty much impossible, then you're not going to waste your time. You're not going to waste your money. You're not going to waste your capital. And they're not going to take you in some scam. But if you don't understand how anything works, then you're probably going to get taken advantage of. And that goes for any category, but especially cryptocurrency. The reason why a lot of the scams, and this is a fact, like a lot of people look at cryptocurrency, blockchain technology, and they say, wow, there's a lot of scams going on over there. Well, it's because a lot of people don't understand how anything works, and so how easy is it to put together a scam in crypto and people fall for it? Super easy because nobody understands it. Now, how hard is it to put a scam together in the stock world and everybody fall for it? It's a lot harder. There's a lot more people who know what the heck is going on. That's why emerging markets always have more fraud in them, because it's easier to trick people. It's really just basic understanding of how the world works. If you have a lot of people who don't understand anything, they're more likely to fall for everything. And we're back over to Sunflower Land. There's a new game coming out called Yakamon that I'm very interested in. I'm more interested to see how they roll it out. It's from the same people who created Sunflower Land. Now, what that means, I don't know. Were they just devs who worked in Sunflower Land? I don't know. That would be good to actually deep dive. But the point is, I look forward to see how that rolls out and how they do. And we have been progressing through Sunflower Land pretty fast. And there's still a lot to do. But I understand this game way more than I did when I first started playing it. I did not even understand how to, upgrade to a different island and stuff like that. How to move up. Didn't get it at all. Struck a heart with his cool glasses there. I think he's trying to say, I'm watching you. I think that's what he's trying to say. Let's go take a look at... Oh, and we changed seasons. If anybody is following along at home. Now we grow different stuff. I got banana trees. The game is really getting far more exciting as I evolve. Because originally when you first start the game, you're just on an island and there's no seasons. So I was really confused for a long time because there were all kinds of things inside the cooking shop, right? There you have a kitchen and you have a fire pit, right? You get the fire pit first, you get a kitchen later. Anyways, there were things like mashed potatoes. And I couldn't figure out how to grow potatoes, but that was because I was on the wrong island. And the beginner island, doesn't have seasons. I'll open the calendar here. When you get to the next island, you actually have seasons, right? And then you get access. The seasons just changed, and now I have access to other crops, and that makes a lot more sense to me. We'll go play a mini game in the kingdom real quick. They really had a pretty fun game going on for that festival, the Colors Festival, and I really hope that they keep that around. I really was hoping to see it on here. I would like to see this third-party mini games that they have. Created by this person, a beta phase officially live. New limited so they have a deep dungeon. I don't know what that is, but there's a lot of people playing it. Sunflower Survivor. Survive waves, earn soul share, unlock plenty of items, and Luna's Corn Maze. Nobody's playing that thing. Let's look at this one. Player economics are not enabled for this farm. Go back. I don't even know what that means, but it did not let me play it. I see that. I was hoping to see that original game that they had for the festival. I want to know where that went. I think it would be a highly bad idea if they let that game go away and never kept it around. Anyways, what else do I want to tell you about? How about some Kindra? Now, if you like these games, I'm sorry to cut you short. We do have DeFi Friday where we really spend a lot of time playing them. I'm mostly just messing around here tonight. I'm not even logged in. Not going to do that live. Let's look at our top gainers, top losers. And refresh. Looks like Pump.Fun, top gainer here. at about 13%, Zcash 6%, top loser, Lido, and ETHFi. And Onyx coin was up yesterday. It is down today. Grass at about 30 cents. VVV token at about 11. I keep saying if Venice token touches about, $8-9, I'm gonna grab me a nice bag of it. So what am I eyeing right now? Of course, I'm eyeing any coins that are already in for great entries, as I even bought a little bit more Anoma and Sui and stuff recently. Anoma is cool, but it's a long shot. I'm not saying that I think people should buy that. Anyways, I'm looking at Canton Network, which is luckily down a little bit. I'd love to grab it around like 8-9 cents. VVV Venice token is one I really would like to get. And what was the other one that I was talking about? Some more Sui, of course. There was another one I was looking at that I was like, if it gets to the right price point, I think I'll jump in. I'll ape in, if you will. But anyway, shout out to all my undergrounders. Thank you for being here. You have no idea how much I appreciate the people who hang out with me, especially night after night, my consistent people that come to really raise that crypto IQ, who believe in the mission of Underground Crypto. With that, I will say, have a good night. I'll catch you in the next episode tomorrow. Thank you, Melissa, for the super chat. Very much appreciated. And Underground Crypto out. We will continue this HEX Pulse Chain deep dive tomorrow.